So, how many shares of Verizon would I need to be able to pay my cell phone bill just using the dividend? That's the type of stuff I like to look at. I picked Verizon on purpose, even though we use AT&T, but that's what I like to look at to see what a goal might be to pay off one of the bills. Stick around for today's video. I'll go through the math with you guys, and then I'm going to talk about some other things and how I use the dividends to try to pay that stuff.
Want to make your money work harder? Enjoy another video with Adam Kahn, the rational investor, on stocks, real estate, and crypto. Subscribe now for your weekly dose of investment insights and hopefully learn a thing or two.
Hello, my YouTube friends, and happy Tuesday. I had to think for a minute. My name is Adam Kahn, and this is Investing with Adam K. Also went by the Rational Investor. Hope everybody's having a good day. I'm really excited to see how the market bounced off of yesterday's lows. In fact, in terms of technicals, it was actually a perfect type of rebound. We retested the lows that we recently made. We kind of breached through them on a lot of the stocks that I pay attention to, which probably shakes out a lot of the nervous shorts, and then we've reversed and we've really had quite a positive day so far. Now, obviously, it'll play out however it plays out from here. But in terms of technical analysis and charts and everything else, that really is like what you look for. As always, this is not financial advice. This is just entertainment purposes only. Please don't listen to me for any financial decisions you guys make. Reach out to your financial advisor as well as do your own research when making those decisions. Because I'm just sharing what I see. And to be fair, I know I'm wrong enough. So I don't want people following the advice. What I saw the past day or two, Monday has been some good fear. We've had so much fear out there. People are rearranging and resetting their stock portfolios, which is smart. Like they should have done that already. But for the most part, typically, really nothing should change in moves like this. Now, we've talked about a lot. I have different accounts. In my trading account, I've traded a good bit, some good, some bad. I actually have some of the positions on from yesterday and then a little bit more today, just because I like the price action. But that could change any moment. In the set it and forget it account, I actually used the opportunity to buy some Nike, but I really didn't do anything else. I had one position that I didn't have because I just thought it was overdone. And in that account, I really won't look back again. Like part of why I put it in that account is I'll hold those shares of Nike for the next 5 or 10 years. And either I'm wrong and Nike will do poorly and OnCloud or some of the others will start competing against them, continuing to take market share, or I'm right and good name brand companies tend to perform over the long run. And right now it's out of favor because everybody thinks that somebody's going to put them out of business or compares it to like Under Armour. But I don't know. I think they'll be just fine and they sell lots of products and tend to do pretty well. I guess we'll see in 5 years. If I remember somehow, I'll do a video on that. Anyway, one of the things I wanted to talk about for those who really like dividends, I was playing around a bit and I took Verizon, which is a stock that I have, and I don't trade it because I'm happy with the dividend I get. And what I do sometimes on some of those stocks is don't get me wrong, this is not the size of the position I have on, but I kind of would set a goal and I'll want to pay off a bill. So I took a look at my cell phone bill. I determined what the average monthly payment is. I multiply that by 12, and we'll go through that. Give me a second while I pull up the notes. I'll get it. We'll kind of go through it, and it might be something that you guys could do to set goals for you. And then I'll go through a bunch of different bills and slowly try to pay them off using dividends so that my attitude is I don't have to worry about that bill because I know the income's coming in and it's one less thing. And then I hope that the dividends actually go up year over year and maybe outpace how much those bills go up. So stick around, should be interesting, or at least I hope you find it interesting. So my monthly phone bill averages about $245 a month. Don't judge. There's actually a few phones on it. I have my wife's, I have my son's, and I also have my in-laws' phones on it. So I honestly, I think for 5 phones, that's pretty reasonable. So it's $245 a month. That comes out to $2,940 a year. Well, Verizon pays approximately $2.71 a share. You'll see the yield fluctuate on a daily basis because as the stock goes higher, your yield will drop a little bit. As the stock goes lower, the yield will go up. I know it closed yesterday around $44 a share. It had earnings this morning, so it's bounced around a bunch. I don't know exactly where it's trading, so forgive me if it's off a little bit because today's trading has been all over the place. But $2.71. The cost of the cell phone bill is 2,940. I essentially divide the $2,940 by the $2.71 to find out how many shares of Verizon I would need in order to be able to cover that bill. Now, they don't pay monthly and the bill comes in every month. They only pay quarterly, and it's not quite $2.71 because when I looked, it was like 67 and 3/4 cents per quarter. I don't really know how they calculate for the 3/4 points. I've always kind of wondered about that because if you own like, I don't know, 3 shares and you're getting whatever, I don't know how they figure it out if they round up on some people and down on another to even it out. But it's not the only company that has that type of thing for a quarterly payout. I always think it's kind of weird. So when I do the math, it comes out that I need about 1,330 shares. I think it's actually 1,331 because it was like point something. So I would tend to round up so that I make sure the bill's completely covered. And don't get me wrong, that's a large dollar amount, but that means if I'd saved up to 58,500 and change, uh, and put it all into Verizon stock, that would actually cover my phone bill. Pretty cool. At least I think it's pretty cool. And then I do that with other things as well. I have Nextera Energy and I kind of compare it to my electric bill. And if you guys want, I can do the math of that. And I go through all of my monthly expenses and then I try to find what I would have to have coming in dividends to be able to cover those things. I don't typically, try to cover for the unexpected stuff. I don't generally try to cover if it's a vacation, and again, I don't want it heard the wrong way. I don't have 1,330 shares of Verizon, and I'm not making enough to pay for the phone bill just with that stock. But I can set it as a goal if I wanted to do that in a company to be able to pay off the bill. And the funny thing is, the reason I picked Verizon is I feel like, well, I'm getting paid from one of the phone carriers to pay my phone bill. It's kind of stupid. I really should stick with just what the best stocks are. But I actually liked Verizon when it fell around $40 a share. I felt like the yield was pretty good. What I try to look at is payout ratios. It's super important to me that a company isn't using way too much of their income coming in to be able to pay the dividend, because that gives me some comfort. I know Verizon isn't a company that's going to grow at exponential rates, or at least I assume that. I think they're in the space they're in, and their growth rate's probably pretty slow. So I don't really see it having any huge, ability to do better and better. And in some ways, I'd probably be better served to be in Google that has a really low yield currently, but has real ability to be able to raise that dividend so long as the Department of Justice doesn't break them up in such a fashion that it really hurts their business. But I think that's a cool way to look at dividends. And then I'll go through like my auto insurance, my property taxes, my home insurance, maybe even my mortgage. And I'll figure out what my monthly expenses are like that and see if there's a way to cover them with dividends. And then I pick some, especially now. A lot of the stocks have had really good pullbacks. Like, I talked about Prudential the other day and T. Rowe Price. We might go into a bad recession. I haven't changed my opinion about what I see going on. I still am very happy about the price action today and bouncing off the lows. At the same time, like we do have a lot of things going on that really could turn the market worse. And if the rhetoric and the news and all the information doesn't change, we could go into a bad recession. Yet if I can get over 5% yield on a dividend stock that's only using about 50% of their free cash flow to make those payments, even if we go into a recession, I have a lot of comfort that they'll still be able to make those dividend payments. And when I buy a dividend stock, I think of it as me getting like the same way I look at a CD. If Verizon is paying a 6% yield, and I know it's a little bit above that, I think of it as I am getting that yield at today's price for the amount of money I put in as long as I own that stock. Now, there are lots of ways to look at dividend and yield and how you guys factor it, so you don't have to follow me. But I look at it like that and in terms of a CD. If the stock price goes lower, I don't really care as long as they're still able to pay that dividend because I'm happy with that return. If the stock price goes higher and what you see is it getting in the yield looks like it's getting less and the value of the shares have gone up, I don't really care that it went up in value. I still think of myself as getting my 6% on the money that I put in there because the dollar amount of the dividend isn't going to change. If I didn't explain it well for anybody who doesn't understand, the $2.71 that Verizon is offering for their dividend should be good for a year from when they made that price amount. They can cut dividends. There is no guarantee. We hope that they raise dividends and you get a little bit more when they update it. But at least you can feel pretty secure that you should get that for a few quarters. That number doesn't really change until they decide to change it. The yield will change every day because based on the 271, if the stock goes higher, the yield goes lower and vice versa. I know one of the stocks I've been talking about a lot is Target, which got close to a 5% yield recently. At least me, I'm so comfortable with Target, I started playing around trying to figure out how much Target I would need for my car payment. It would be a lot of Target, and I'm not ready to put that kind of money into it just because I'm not ready to have that large of a position. At the same time, it's a good goal to have, and then I wouldn't worry about a car payment. Now, fortunately, I don't have that many. I think I have another year of making the payment, but anyway, my point is you can do that with any stock that has a dividend that you think is a good value, with any bill that you have. I just wouldn't sock everything into one stock no matter what. I would try to spread everything out, but that's just me. Um, my thoughts and part of why I love dividends. Now, the thing is, I still think that Amazon is probably a better investment for the long run in terms of how much the company is going to grow, or Meta, for example. That's my thought and the difference between a growth stock and dividend. And if you're really disciplined and you have growth companies and you sell a small percentage if you need it as equivalent to dividend, but I find that a nuisance. I don't want to pay that close attention. The reality is, for most of the stuff, I really like the set it and forget it account because I don't really pay attention. And when we have big down days, I don't care because I don't look. It doesn't impact my life. My goal with that account is that, my wife and my son are able to use it after I'm dead. But let's hope that doesn't happen anytime soon. To be able to make their lives a little bit easier. Like I just try not to think about it right now, so it doesn't really matter what's in it. And I think more in lines of accumulating as many shares as possible in the meantime, less than I worry about the price. Now, of course, the trading account, I overanalyze. I watch it too often. I'm like a junkie with my quotes all the time. Like, give me my stock quotes. But it's kind of silly at the same time. But I enjoy watching the markets and listening to the news. The reality, though, is I really do think of that stuff as noise. Like, I think the price action matters more than what they're saying, and what's on the TV can tend to get people overexcited or scare them out of the markets. Let me know what you guys think. I mean, do you use dividends? Do you care? Does it make no difference? Do you just buy the best stocks you think are out there? Or do you really just pay attention to the dividends? I try to stay away from the high yield stuff, and I've done a couple of videos on why I hate the yield max stocks. And quite honestly, if the guy who runs it is as underhanded as I think he probably is, I think that somebody like that could deserve jail time. Uh, my thought on those funds is it's somebody who's just selling them because they know how attractive saying high yield is, and they're not really doing their clients service. And if you are a retiree looking at TSLY, please do your research on it. I am not telling you to not buy it. I am not telling you to buy it. But understand exactly what you're getting into and the type of risk it's taking on. Because I don't think the fund managers, I don't think the salespeople, I don't think anybody really explains to somebody before they buy it the type of risk and what the trading strategy is. And I would hate to see somebody go into retirement thinking, geez, I don't have to have all that much money because if I buy this stock, I'll get an 80% yield and I'll be able to rely on that income to be able to afford my bills. Just understand what you're getting into because it's possible that that will change, or maybe it isn't quite as much as you were hoping for, or the price of the value of the underlying security could continue to go down, even if you're getting some payouts in the meantime. Yeah, maybe it ends up being the best investment ever. That's why I said, by all means, don't listen to me. I get a lot of hate comments when I talk about the yield max funds, but I don't think a lot of people really understand the covered call strategy using synthetic options to be long instead of just having on a trade and maybe selling a call against it because you don't think it'll get that far and you'll pick up a little bit extra money. There are all sorts of ways to use options. I really like them. I love selling cash covered puts to either get into a position or potentially collect up some money that on a stock that never gets to the price where I want to buy it. I like these strategies and I like selling covered calls. So it's not that I have a problem with the strategy per se. I just have a problem with the sales pitch and who I think it gets sold to. Anyway, enough on my soapbox. I wasn't supposed to, I didn't plan on talking about yield max. I was just talking about dividends and how I use them. On that subject, though, I would rather pick up a company that's paying a 3, perhaps a 4% dividend, but that I think they have real ability to raise that dividend 10% a year or however much going forward, because that'll be more valuable than even the Verizon that I'm buying because the yield is higher than I expect. Because to be fair, I don't expect them to be able to raise it at a huge rate like some of the other things. Anyway, I hope you guys found it interesting. Do you guys do similar with your options or dividends? Do you try to figure out your bills and try to cover them? Because that's my ultimate goal is to make sure that all the bills are covered by it. But before I go, before I forget, do me a favor, hit that subscribe button, smash the like button, make some comments in the comment section. I do really appreciate it. I hope you guys are having a great day. I hope your week goes well. I apologize that I haven't been super consistent on getting the videos out, but I mentioned in the other day, my wife, who sponsors all my videos, so obviously, because I haven't had time to do them, had to run out of town to help her cousin. She's having knee surgery, and her parent, anyway. So I've been trying to get dinner ready, clean the house, do all. It's quite a task the amount of stuff she gets done, and I'm still trying to keep up at work as well as every now and then put up a video. So I miss her very much. I'm excited she comes home tomorrow, and we'll see how it goes because I really don't tell her. I don't think she watches my videos, and even if she does, she'd be too bored listening to me to get this far. But I've beyond cleaned up the house where it's spotless. I even bought like shoe racks to organize. If any of you are married to Asian women, like you don't wear shoes in the house, so there's always like all these shoes in the front or by the garage. So I bought and put together some shoe racks and organized the shoes so that it's not just laying around. I cleaned out the laundry room like spotless. I did the laundry, I did the sheets, I did the pillowcases, so a whole bunch of stuff. Hopefully she's pretty excited when she gets home. Anyway, thanks again. Have a great day, and I'll talk to you guys soon.